Hi, I'm Brian Decker. One of the things I get the most questions about is credit score and how it affects you on getting a mortgage and what actually affects your credit score itself. So the first thing to note is there is multiple scoring models for your credit score. So most mortgage lenders, we use the FICO score, typically the version 2 score. Now, most free credit report sites as well as credit card statements, they typically use a Vantage scoring model. Now, not necessarily one's right or wrong, they're just different scoring models. And so the score you look at on one will not be the score that is typically pulled on the other. So when you are looking to get a mortgage, we always want to be going off and reviewing the credit report that we will be using for your mortgage. Now, one of the things that I really like to focus on with my clients, because credit is such a personal piece of information, is educating them on anything we can typically do to improve that score. So two of the things that I really hit home with as clients that many times people do not know is how credit card utilization can really affect your credit score. So even if you pay a credit card on time, if your balance is typically at a high portion of that card's limit, it can really affect that credit score. And many times, even if you pay off that card every month, the creditor is reporting to the credit bureaus at a different time than you are making that payment each month. So many times they're reporting a balance that isn't what you think your balance is being reported. And so by paying a lot of times these balances down or syncing up your payment with when the creditor reports can really in many cases help you improve your score. The other thing that is really probably the biggest effect that I see on my clients' credit reports is derogatory items. Things like late payments on credit cards, car loans, past short sales or foreclosures. Most creditors typically report these items for at least 7 years. Now, don't worry, if you have late payments, it's very likely not going to be the reason to disqualify you for a mortgage. There is hope, and many programs are very lenient with credit scores. So if you have a couple late payments, it's very likely that that won't be the reason that you get disqualified for a mortgage. And if for some reason there is something on there that you're concerned about, I will take that time to go over it with you and we can look at ways to resolve that. And when you apply with me for a mortgage and we pull your credit, I will always take the time to review your credit report with you. And I can even run it through our credit analyzer to see if there's any particular items I see on there that may help you improve that credit score. So we can make sure to always do everything we can to get you the best rate available to you, whether you're going to buy now or in the near future. I'm with you on this journey and I look forward to working with you.